Hey everyone, it's Evan here from the Trade Risk on Friday, June 7th, here with a weekend market recap video. We're going to cover all of the major markets, the current market environment, and finish off looking at some sector analysis. So we saw a monster rally this week, making it the largest weekly gain all year to date across the major indices. On Friday here, rallying almost 1% across the board. Q's almost 2% here on Friday. But it's that 5-day change number that's real impressive, 4 to 5% right across the board. And that put us back above most of the 10, 50, and 200 simple moving averages across all of the major indices. If we scroll down a bit further here, take a look at what sectors led us there. It was really materials out in front largely. 9% move here over the past 5 days for materials, followed by semiconductors and technology. On the downside, we had utilities, we had biotech, and we had financials up approximately 3 to 4% on the week. If we look over to the major markets here, we got S&P 500. That's the top of the pack, followed by metals, silver, and gold. And on the downside, we got volatility coming out, natural gas, and the US dollar. So let's jump into the charts here. We're going to start it off with the S&P 500. This is the weekly time frame. This is also the cash market. It's where we like to start our analysis each and every week. Now, first things first is just take a look at the size of this week's range and what this bar looks like. It's an outside reversal week. That means we just briefly undercut last week's lows. We went underneath last week's lows. We rejected those levels. We reversed, went green. We took out last week's highs. We took out the week before's highs. We took out 2,800 or reclaimed 2,800. We reclaimed 2,872. There was a lot of recovery action this week for the S&P 500, for the equity market, U.S. equity markets as a whole. It was a broad recovery week with a good stand by the bulls to put in some type of floor or meaningful, demand point or higher low, if you will, across the markets. Now, going forward, or how we can interpret this now, is that this week's lows is an important area to hold going forward. This 27.28, in fact, it's a great spot now, which we can use to help measure risk against and basically say, look, the party is on for the upside so long as we are holding above 27.30, 27.28, this week's lows. That is where we saw the sharp turnaround. That is what our last biggest technical event was, so to speak, and that's what we want to hang our hat on going forward as a meaningful spot for the market. So this week's lows, that's what I'm going to be paying attention to going forward as the crucial spot to hold. If we take that out, then certainly all bets are off falling back into this old range. Now, of course, this was an impressive week, but it doesn't mean that risks are off. It doesn't mean we can all jump back in the pool and there's nothing to worry about. There's, of course, some things we still want to be aware of, and we're going to talk about those in just a moment. But from that price structure perspective here on a bigger picture, on the moderate term or midterm, long term, however you interpret the weekly chart, I think this is a very constructive stand here by the bulls after a 5-week pullback, 7% off of highs. We abruptly reversed it, 5% snapback 1 week, and recovering about 60% of that move. So going forward, this week's lows, I think the ideal situation here for me, or in my mind, that the path I would love to see the market takes, but to see it take going forward, but it certainly doesn't care what I think, would be to get a brief kind of pullback or consolidation back to this 2,800 level. And if we could even hold 2,800, put in some type of higher low, so maybe even just some range compression, kind of dance around, pull back a little bit to 2,800, hold that rough area, and then start to work higher again. I think that would be certainly the ideal spot, or the ideal path that the market could take for us technical traders looking at those key levels. Of course, that doesn't have to happen, but 2,800 is still a place where I'd like to see the market hold. Or if it can't hold there, then of course the lows from this week, that's the spot where it really does need to hold. Now on the upside, 28.72. Holding in around this area here. That was the midpoint of the May range. I'd like to see us hold that, or at least base underneath it or around that area. And then the 29.41, 29.45, that's the prior all-time highs. We're only 2% away from them at this point. And if this weekly candle decides to get some follow through here, and this turns into something like this outside reversal week, which was the last meaningful outside reversal week, was back here in December. Now, of course, circumstances were very different. We sold off 15% in 3 weeks versus, selling off 7% over the course of 5 weeks, right? So we were much more stretched to the downside here back in December, but it does go to show you that these weekly outside reversal candles can lead to some very powerful moves. And in this, in this era of bull markets, they love to be in V-shaped form where they basically don't look back and just march higher and higher, causing everyone to sort of catch on board and pay up for higher prices. So, something to keep in mind, an open mind. Again, we're not here to predict what's going to happen here. Nobody can do that. But we want to keep an open mind of the path that the market can take, so we can prepare ourselves to trade it and to do it responsibly. So the S&P 500 on the weekly basis here, nice candle, nothing but good to say about it. It's about as good as you could ask for the bull case. We'll see if they can hold the line going forward and not just give this all right back. Now, if we go down to the daily chart for the S&P 500, you can see Monday was the down day. So we came into the week with this down move here, poking our heads below last week's lows. We did get a nice little tail there. And then it was Tuesday's session where we gapped up and then just really rallied throughout the whole session. Wednesday added to it, Thursday added to it, Friday added to it. So when we look here on the daily chart, you can see we are coming back into more of a congestion spot here. This is where the market topped out in mid-May, which led to the latest leg lower. We're coming back into that after a very sharp 5% move. So once again, stalling here or letting this resistance sort of take hold for maybe the market to kind of pull back, digest, and maybe make a move back down to 2,800 or come back into this range and dance around a little bit is perfectly reasonable. And this is why I don't think we're necessarily even out of the woods just yet. As impressive as that weekly bar looks, I do still think that there's some technical levels and some things that we want to pay attention to, namely this 2880 area, 2872 area, where we found resistance here just a few weeks ago. Now, one other thing we'll jump to is the VIX right now, and curiously, this is kind of still hanging up here. In fact, it held green today on Friday while the market was up over 1%. We saw the VIX also up 1%, which is a little interesting. We also see it kind of putting in some type of potential higher low here. In fact, it is virtually a higher low given the fact that price is now lower. We are above where price was out on this date of the 22nd versus where the VIX is now trading at 16. Kind of talked about the same concept over here where VIX was putting in some type of higher, lower high. Sorry to confuse you on going back and forth, but we talked about this of putting in a lower high here in VIX as the market made a new low. And now we kind of have the opposite here where we have the market attempting to make a new high, and now the VIX is sort of making a higher low here. So we're getting almost like this compression here. I'm not trying to do technical analysis on the VIX necessarily, but we're getting this kind of tightening pattern here in the VIX where we're getting lower highs, higher lows. Just interesting to note that the VIX closing green today, holding 16, while seemingly everything is all right in equity land right now. So that might give you a little bit of pause there. That VIX is holding up a bit. S&P coming into resistance, up 4 days in a row sharply. Maybe a little mean reversion or pause wouldn't be too unusual to think about going into next week. Again, well, before even going into again, let's take a look at some of the the other major markets. We'll go to IWM next, which you can see first on the weekly chart. It was a impressive 3.5% week on the upside here, but notice it was actually an inside week for the IWM, which is pretty impressive here. That we basically had an exact mirror of last week. It went, we were down 3.27% last week. We recovered 3.43% this week, and we traded exactly within the bounds of last week's highs and lows. So the IWM is still on a relative basis now. It is still it is still kind of the weakest of the bunch in terms of just price structure. Look at where the IWM is. Look at where the S&P 500 is, trading just under its all-time highs, 2% away from it. Look where the IWM is. It's trading, at this point, it's trading about 6%, almost 6% under this prior relevant pivot here that it was in back in the beginning of May. And of course, this level is nowhere near the all-time highs back up here around 173 made in September of 2018. So from a price structure perspective here, yes, this was an impressive week. And yes, I still do like the fact that we closed back above the March lows here. So back above 148, I think that's a good spot to be holding above. But there's still plenty of work for the Russell 2000 to really chew on here. And I think if you're a bear here, if you're not necessarily believing in this week's rally, you're sort of hanging your hat on the IWM saying, you know what, this is definitely not out of the woods yet. This is still in a tough spot, nearly almost still holding the downtrend line over the past couple of weeks. So this is kind of where we want to see how the market follows this up next week. Can we get follow through to the upside and start clearing back above some of these prior technical levels? Or is this going to be the first to kind of roll back over and give up some of this week's gains? I think the IWM is going to be an important one to watch next week. So once again, let's pay attention to this week's lows. Let's pay attention to this 148 area, and then let's just see how the market reacts heading into next week. If we go to the Qs here did have an impressive snapback. This was a 4% move. We very clearly had an outside reversal week, in fact, a bullish engulfing week, and we did take out last week's highs. We did also reclaim back above 178, and this was after a slightly steeper pullback here from highs to lows. We had about 11% pullback in the Qs, so pretty meaningful given the fact that it was over 10-11%. We had it took place over 5 or 6 weeks. We had this high volume reversal this week. This again from a weekly picture. This is one of these bars where you look back in 4 or 5 months and say, yes, this is where that big pivot started, which started the next wave higher. So we do want to keep that in mind, but we also want to just know our time frame and just know that you are, chasing a little bit here. If you're a shorter term trader, maybe you're waiting for a better entry. If you're a position trader trading for multiple months or weeks at a time, then this is really the candle that you really like to see start it all. So that's the Qs, 178 going forward. That's where we want to see us hold, and then we have some cluster of resistance here about 185 in the NASDAQ 100. So that pretty much covers all of the major markets there. Very good stand by the bulls. Not all is clear. We still want to pay attention to the VIX. We still want to pay attention to some of that IWM relative weakness, but for now, it's certainly a win for the bulls. Now, getting into some of the other major markets, we go to TLT here. This is also an interesting piece of information, is that TLT didn't really budge this week. We did get we got a pullback intra-week, but notice where we closed here was back to flat here. So we essentially have bonds which are holding up with rising equity prices. So we kind of have, rallying bonds, rallying equity prices, if you will, throughout the course of this week, or at least staying pat here in TLT. So that's also just kind of an interesting aside there with the VIX kind of holding up, TLT holding up a bit, gold, which saw a big rally this week. So it's an interesting week for kind of the snapbacks all around. But regardless, TLT here got a little bit of a pullback. It's started to put in some type of higher low. It's working itself higher here. We still have our position in TLT. It's just down to a third of what we originally had on from our latest trade, but we're still holding on to it. It's holding up. We're trailing up our stop fairly aggressively at this point, but we're looking to see just if this can continue higher. So far, so good. Good volume coming in. We'll see if we can start to challenge these highs and find out how it reacts if we can get back up there early next week. If we let's go to metals next, because I think this was the interesting spot in the market this week as well. 2.64% move here in GLD. That's following up last week's 1.67% move. And you can see, just look at the size of the past 2 weeks of gold. We got a nice kind of range expansion thrust away from this support here. We got a break to effectively new closing weekly highs for the year in gold. So we're getting a breakout in motion here in metals. metals. We still have a lot of resistance up here around this high upper 120s. So we do have, sort of our work cut out for us going forward, but this looks where the market wants to get to and retest is kind of the highs from 2018, this 128, 130 area. And if you watched our long-term video this week on market analysis on gold, you know that this is a big spot going back multiple months, multiple years. So GLD, bulls still getting it done, real tough chase in the short term, but for now, it is certainly working higher. Now, silver is one that we talked about in our midweek video that we really wanted to see play catch up. If we wanted to believe in the gold story, we really wanted to see silver start to perform as well. We started to get that towards Friday. We got a little bit of a fade off of the highs here, but we're back above $14, and 14 is relevant because this is the top end of the range from 2018. So we would really like to just get some more confirmation and price acceptance above 14. That would be the ideal situation here for silver. That would help, kind of the metal case, the thesis there to get silver outperforming gold and start to get them rallying together. I think that all, would be pretty nice. And there's some good volume coming in on this week's bar. So silver, 3% move to the upside this week. We want to see if it can hold back above $14. If we go to the commodity energy space here, USO oil put out a nice outside reversal week as well, did it on heavy volume. You can see the daily chart here has been quite beaten up. It did suffer a pretty sharp pullback here. I mean, it was up pretty dramatically on the year, but from highs to lows, this was a 24% pullback in about a month and a half time, and now we're starting to get a little bit of a bounce back off of the lows. We're up about 7% off of those lows. So for now, a nice kind of dead cat bounce as it is right now. I don't know if there's too much else we can get too excited about right now. We're going to need a little more time and conviction and price acceptance and some more convincing that this higher low is a good higher low to trade against. For now, I'm not so sure that I would want to be, trying to bottom tick that. But if you're a shorter term trader, that makes sense. Now, natural gas here, the last that we're going to look at. Also, actually, no, this was down on the week 5%. There's no also here. This was totally in the space of its own. This continues to make new lows here. There hasn't been anything pretty about natural gas for a while now. We had a brief moment of some life here throughout the end of April, beginning of May, but that broke down to this latest leg, and this continues to break down, making new lows on the year. If you look at the long-term chart of natural gas, it's a mess as well. So there's really nothing to like here, except for the fact that maybe it looks so bad that it's going to start to look good again, in the sense that if everyone turns bearish on it, if nobody wants to own it, if everybody, fundamentals and technicians, all hate the space, then sometimes that's where the magical wave of the rally can start to ensue. I certainly am not betting on that taking place. Just doesn't fit what I look for, but it's something to think about, I suppose, if you want to be a real contrarian there. But I don't see anything that looks pretty there in the technicals for natural gas. Now, let's get into some of the sectors here that performed on the week. Number one, as we said, by and far large here, XLB. Look at the volume that came in this week. I mean, this is an impressive stretch of a rally here for XLB. This is usually, this is something that looks like the start of a big move coming in the space. Again, it's very short-term overheated, so it's a real tough chase. You want to let this base out and settle in, but it really comes down to time frame. If we look at the weekly chart here, 9% to the upside, clearing back above $56. There's still a lot of supply to the left of us here throughout 2018. All of this supply is in here, but it looks like it really wants to continue to move higher here. So XLB is probably a space we're going to be looking at over the coming weeks for trade ideas. XLK, this is technology, was the second best performer here, also putting in a pretty impressive weekly bar, pushing back up, kind of moving back above some of the supply here from 2018 as well, looking like a higher low that wants to get going. Going to be a good space to pay attention to. And semiconductors, nice move here, but remember, this is one that really got beaten up. It sold off 19% in about 6 weeks, so a snapback here isn't unheard of. Held at $100 where it wanted to, where we needed it to, or where we would like to see it hold, right at the past technical kind of highs here from 2018, and this bounce is playing itself out. Wouldn't necessarily want to be too aggressive chasing it. That's my style anyway. I'd rather just be waiting to see if this could, kind of settle in a little bit, but semis putting in that nice rally. On the downside, IYR is the worst underperformer this week, 2.62%, still positive on the week and still breaking out. So really, there's not much to really dislike here. It's breaking to new highs where basically none of the other sectors are. So IYR is doing pretty well, but it just didn't have as big of a week as some of these other markets that really did get beaten up over the past couple of weeks. XLU to follow. This was still up on the week, 3.11%, broke back out. We saw a little bit of reversal here on Friday. Again, it's trading just under its all-time highs, so I can't think you'd be too upset with that space right now. Last but not least is IBB, 3.85% this week. You can see it did reclaim this 101 area. We talked about in last week's video, we talked about some of the positive divergence that was going on here in the space. We talked about XBI and IBB. We did have a trade in this ourselves this week. From Monday's trading session back up into this range. We no longer have a position. It was just a quick trade. But that, playing for that divergence that we were talking about up here as we had the IBB or XBI specifically trying to make new lows with price. We had momentum trying to make positive higher lows. And we did, get that, that play out there. But it did underperform on the week. So it was unfortunate to see that despite what we saw here in momentum, this really didn't keep pace with something like technology, semis, and materials. It is holding up here. It is back above $80, or if we go back to the IBB, it's back above this $101 area. That's where you'd want to see it hold above. It's back into this range now, and then the next step is going to be back above 107. But this area is not as overstretched and bought as some of the other places of the market. But at the same time, you don't want to see this roll over either. So you got to be careful there with some of the biotech plays. Which are still not as extended, but now we're starting to get them falling behind some of these other risk assets. So that is the recap for this week. There's lots to get through there, but as always, thank you so much for tuning in and watching. You can subscribe to our YouTube channel, follow us on the Trade Risk. Have a great weekend, and we'll talk to you next week.